So you're looking to qualify for a single family home, but your credit score is low. You still would like to invest in a single family home, but the bank you just spoke to said that you won't qualify. If you like this content, hit the subscribe and like button to get more content just like this. So the question is, how do you get around this credit situation? Well, number one, you can work on getting your credit score higher, which takes some time. Sometimes it can take anywhere from 3 months to a year to get your credit score to a point where you can qualify, right? The second option, which is the option I think is viable, is to get a credit partner. See, what happens is with an investment loan, the banker says, okay, since your credit is low, you're going to have what they call a guarantor or a cosigner or what they call a credit partner. Now, this credit partner will have some equity in the particular project. So in the operating agreement, which is what you will have when you do the LLC for the corporation, there will be what they call an operating agreement. The operating agreement will have the credit partner as a part owner. Sometimes the bank says that it's required that the credit partner achieves 20% of the equity, or sometimes 25% of the equity just for being a credit partner, which I think is fair because if in fact the loan is not paid, they not only will come after you, but they will also come for the credit partner. So that credit partner is taking on a lot of risk. He's taking on a significant risk. So 20 to 25% of the equity upside is not that big of a deal in the grand scheme of things. So here's how to get it done. Yes, now the next thing is you would need to go out there and look for someone that has a good credit that's willing to partner with you on a property that you're looking to purchase, rehab, and resell. Now, the question is, how do you go out there and find a partner that's willing to partner with you? Well, there are a few things you got to do. First off, you got to understand the knowledge of how to invest in a single family home, let's say. You have to understand where you're going to make your profit at. You got to understand the costs that are associated with making that particular investment as a single family home. And then you got to know how to exit, whether or not you're going to refinance, whether or not you're going to sell the house. And also, you want to really understand the evaluation of how to look for a home, how to manage a home, and ultimately purchase a home. So here's some key things you have to know before you can even go to a credit partner and ask, because that credit partner, they did not get their credit score to a 800 or 700 range without some intentionality. They work towards that particular goal. So for you, you have to make sure that when you go to that credit partner, that you have a bulletproof plan. Your presentation is really good. Therefore, they can have a pathway, or they'll see a pathway on how you will be able to pay back the loan, because ultimately that's what it's about, paying back the loan. And as a kicker, you can give them some of the upside. Now, you really don't have to give them 20 to 25%. You can say I give you 10% or 5%, but on paper in the operating agreement, it has to say 25% or whatever the bank wants you to put on that particular operating agreement. It could be 10%, 15%, but traditionally it is 20 to 25% partner. So on that note, here's how to get it done if you have low credit and you're looking for a credit partner. Till the next time, take care.